I've started recording. Yeah, it's recording now. Uh, let's introduce each other. My name is Kostadju. I'm based in the UK. Keen to develop different fintech solutions, projects, and actually developing a couple of fintech businesses here.
I've seen your records, interesting, and I like it.
Thank you. Nice to meet you, and thank you for finding time to talking to me.
That's right. I hope we could help each other in these issues in the future, and I think there's a lot of opportunities for fintech companies, for European fintech companies here in Latin America, and also for another Latin American fintech companies there in Europe. By the way, my name is Ruben Diaz. I've been working in ICT, information and communication technologies, for almost 25 years. I was Vice Minister of Telecommunications here in Ecuador in 2010. I've been working in the development of the innovation ecosystem here in Ecuador, and also the last 2 years, I've been involved in fintech, trying to develop the fintech industry here in Ecuador and in helping fintech industries, and also banking software companies to thrive in this world, and also to small credit unions to understand what's going on here in the world of fintech, what's going to happen in the world in the few years we have ahead. Because I think the financial industry is going to change forever in the next 3 years in the entire world. So they need help, and there's a lot of enterprises and there's a lot of institutions here in Ecuador and Latin America that needs to know what they should do or what they could do in order to thrive in this very exciting future.
I see. Meaning that you are actually based in Ecuador, and the whole your experience based on this Latin America region, right?
Yeah. That's right.
I see. Yeah, definitely good to know. It's because last week I had a very similar call with a guy from Malaysia. He brought and he shared his experience in regards to South Asian market, and he told us so many interesting stories about local specialities within the banking industry and how to pioneer local financial services there. And I think today it will be good to talk to you about Latin America perspective and what's going on that end of the world. It's because today we are in Europe, we're based in between Asia and Latin America. I think as fintech leaders, we definitely should share our experience, and probably some of your Central America fintechs and startups wish to go to Europe, to the UK, and explore this area. And probably some of them are interested in going to Asia, where we already have a good connection. My new friend, his name is Rinad. You can check out our interview last week on the YouTube channel.
That's right.
And yeah, we'll be happy to talk to you today and ask you a few questions about the local environment for fintechs. For today, we have, let's say, 4 or 5 questions to put a light on them by yourself, by your experience. It will be kind of an interview. At the same time, I will be happy to share my own experience from European, and feel free to ask me any questions you are wondering about. We're happy to share what's going on here if you want.
Oh, perfect. So, perfect.
Let me start with a question around contactless payments. Is because what I found crucial to know is that, let's say, the whole United States of America, they still use a magnet strip to perform payments. And I would say the majority of American cards, they are not contactless. Only next year, America will introduce about 100 million new contactless cards. But today, the US, it's not the market, the right market for contactless payments. But here in the UK and across Europe, we prefer to go contactless. We love to use our wearable devices, iPhone Pay, Apple Pay, Google Pay, etc., etc. What about the actual, the today in Latin America and Central America for contactless payments?
Well, let me tell you something. I was in 2004 in South Korea, and I was amazed in that year, 2004, to see that they were using contactless payments already in that year. What it means that it's not about technology, because we had the technology like 20 years ago. It's not about the technology. It's about people adopting this. And for people adopting this, they need some sort of a stimulus. And for me, COVID-19 has been the greatest stimulus for contactless payments and for a low contact economy in the world forever. So until now, in Latin America, we'll still see there's a lot of maybe 50% of the credit card holders still have a contact magnetic card, but I think maybe in the next year or next 2 years, they're going to disappear forever. Because right now, the biggest banks here in Latin America are already using and they're using these contactless cards. It's about stimulus, and the stimulus has finally arrived. Now, what I understand is that it's not only contactless cards, but the entire industry is moving to mobile payments. So that's the thing. It's not only about going contactless, but going mobile, and going mobile in both sides of the user. You know, the card holder and the shop who's going to receive the payments. So everyone is going to move to mobile. That's going to cause a great volume of financial inclusion. But what I see now here in Latin America is that last impulse that we needed finally arrived. So what we are going to see is in 1 year or maybe 2 years, almost all physical payment methodologies, I mean, cash or credit, magnetic credit cards, are going to disappear forever. That's something that's very obvious here in Latin America.
I see, I see. But what people, what ordinary users of payment industry usually today feel about security? Do they trust contactless methods to pay, or there is some concerns still there? How people comfortable with contactless payments today?
Users here in Latin America are much more aware of the dangers and perils of any kind of electronic transaction, but they also feel that contactless payments are much more safer, not only from a biosecurity perspective, but only from a digital security perspective. Because let me give you an example. If you, here in Ecuador, what usually happens is that you provide your magnetic card to the shop or to the restaurant, and they take it and away, and they bring you back the bill, and then you have to fill it and sign it. That means that there's a space of 5 minutes, 10 minutes that you don't have your card with you. In case of contactless payments, you will be forced to put you holding your card against some sort of machine. So for the user perspective, it's much more safer. And again, it's not only safer from a biosecurity perspective, but from a cybersecurity perspective.
I see. Yeah, it makes sense. It's because actually, at the same time, I have a subsidiary in Africa, in Ghana, and because of this, we are dealing with a few more African countries like Zambia, Zimbabwe, South Africa, Kenya, Democratic Republic of Congo. Some of local users, they are afraid of using contactless payments. It's because they don't trust to the payments. Probably it's because of a high percentage or high volume of local fraud events, probably, maybe. But how about the fraud within payments, within this like banking industry in Ecuador?
Excuse me, could you repeat the question?
Yeah, how actual environment looks like in Ecuador in terms of fraud and stealing someone else's card data, some data leakage from banks.
Oh, okay. Well, let me tell you something. Uh, Latin America is a very heterogeneous continent. You know, you cannot. Brazil is quite another continent. Argentina, Chile, those are countries that are very developed in some ways. And Mexico is another huge market. But you have also small countries like Central American countries, and you have also Bolivia, Paraguay, which are they show a much more lower development of their banking system. So you cannot say this is what's going on in all the countries, but um, especially in Ecuador and in Colombia and maybe in Panama and Peru, the banking industry performed very well in the last 20 years in terms of technological development. And actually, in the case of Ecuador, we export banking technology to other countries, including Japan and some parts of the United States. So there's it's the technological ecosystem here behind the back office technological ecosystem of the banking system here in Ecuador is very developed. Also in Colombia, also in Panama, also in Chile. So we have countries that actually we do not have nothing to buy or nothing to learn from Europe in terms of technological development, or even United States, or even some Asian countries. But there are also another type of countries like Bolivia, Paraguay, which have much less greater levels of development. So you cannot say everything uh, is the same from all the countries. But in general terms, cybersecurity here in Latin America is very strong, but not because a government regulation, or not because the regulator is very strict in that sense. It's because the banks have been very aware of this kind of dangers in the past, and they have promoted their systems. So most of banks in Ecuador have world-class um, cybersecurity programs and world-class cybersecurity technology and professionals. The problem is that in general terms, what we do not have here in Latin America is what you have here there in Europe, especially in the UK, is a especially and specifically devoted law about data privacy. That's what you don't what we don't have here, and that's going to cause a lot of trouble for the fintech industry in the future. Um, but I think in about 3 years or 4 years, we're going to catch up in our regulatory framework to the regulatory framework of some Asian countries, and especially the UK. Regulators are very aware of they are late. They are very aware that they need to catch up. So we're moving in that direction. But in general terms, I would say that the financial industry here in Ecuador, in Latin America, they have all the trust of the people in terms of managing their data and their money. But the financial industry in here in Latin America has a huge amount of debt in terms of what they could offer to their clients in the digital experience. I mean, the digital experience is provided by banks here in Latin America and credit unions, cooperativas to the clients is very poor, and that's a hole that some fintechs in the world could fill and could they fintechs in the world could fill this gap. So there's opportunities here in Latin America, especially in the payments industry, but it's not a market sound or developed as the African or sub-Saharan markets, but much more developed than that. Maybe not that developed as South Asian countries, but we have a very developed ecosystem here.
I see, but when you're talking about the ecosystem, could you tell me about how actually merchants today accept payments? What do they use to accept payment? All of this like old machines or new machines, or do they prefer to accept cash only? And at the same time, I'm wondering, is there any supplies for MPOS devices for small card readers that connect to tablets and smartphones? Do they in use in Ecuador and Latin America, like these small devices?
Well, that's a problem here, and let me tell you something. What I was talking to you about is the state of the art of the portion of the market that actually use mobile payment options or mobile payment systems, POS. But maybe the 80% or maybe the 90% of medium-sized shops or small shops or professionals, maybe the 90% of them, they do not have some system to receive payments in any way, not contactless, not magnetic card. And one of the results of one of the reasons that's why is that happening is one of the reasons for that is that only about 20% of the population in Latin America has a credit card, and maybe 30% of the population in Latin America have a banking account. So we have a very huge amount of people, maybe the 70%, 60%, maybe 40% in another economies, that still now they do not have a formal banking account. And that's the one problem we're facing when we see this kind of payments. Um, but all the governments are seeing that they need to fix this. And not only because of the COVID, because we have a lot of macroeconomic issues behind. So uh, no, there is the portion of shops, of physical shops using POS solutions. They actually use magnetic cards, and maybe they're moving to contactless. But there's a huge portion of shops that are not using any kind of,
I'm assuming it's because they even don't need to buy a machine to accept card payments. It's because
it's too
they're
expensive.
yeah. And first of all, it's expensive. Secondly, probably again, I'm assuming it's difficult to get these merchant services enabled for them by local banks. And at the same time, they even don't need the machine itself. It's because people prefer to pay cash, physical cash, right?
Well, due to the security levels, I mean, physical security levels, and crime in Ecuador and in Mexico and other countries, people would like to not use cash at all. We are forced to use cash because there's a 70% of people of shops that don't use this kind of POS to receive any kind of electronic payments. Why? Because it's too expensive for a small shop to get an account.
I see. Again, I think it's like a chicken and egg problem. Yeah,
Yeah,
they don't have a machine. That's why population and people they don't have an account is because they simply don't need it. I
that's
see. I
that. That's
see.
right.
Yeah, but
But
yeah, go on.
the main reason for shops, small shops, to not adopting these POS systems is the price. We're talking about $600 for the machine, and maybe $50 the service a month. This was like a year ago when I was researching this. So in general terms, in Latin America, if you want to have these American systems in order to receive payments, uh, the amount of paperwork you should do is huge. It's like you're opening a new branch or you're opening a bank. It's really huge. And it's stupid because banks and networks and payment networks, they do not receive the all amount of the money they could receive. So that's a huge hole in the financial system and the payment system we need to fix. And that's totally tied and linked with the development of the financial market, and totally tied and linked with the penetration and the distribution of financial service in the population. It means that we need to
I
move
see.
from
I see.
30% to
I
70%.
are you talking about these kind of machines?
Yes. In
Yeah,
Ecuador,
exactly. This machine costs about 500-600 American dollars for a merchant. But uh, let me show you. Let me show you something. It's because I have a good demo application on my smartphone. It's just I'm not advertising it, just sharing with you my experience of what we've got here in the UK. This is just my ordinary Android smartphone. It's BlackBerry,
yeah.
but forget about it. It's just Android smartphone. Uh, I've got this mobile app.
Uh-huh.
If you see it, I can enter my cashier PIN code. This is an ordinary Android smartphone,
Mhm.
and I can use this smartphone to accept a payment by phone just by simply tapping a card behind it, and that's it.
Oh,
Can you imagine that?
that's great. That's
Meaning
great.
that the app can accept physical card payments. At the same time, you may use your iPhone or any other Android device to pay by and to accept payment.
But
It's something.
that's a special iPhone needs some kind of, it has some sort of near field technology or something.
Listen, this is just a very basic Android smartphone. The only
Um,
thing must be on the phone is NFC or NFC
NFC,
to
near
accept
field.
payment. This antenna, that's
Mm.
it. And even a phone for 200 American dollars could be empowered with this app to accept payments, meaning it costs nothing in terms of starting accepting payments by cards or by wearable device, etc., etc. Personally, I love this technology, and I'm happy to share. Probably some of your local banks or local fintechs would like to consider this solution. It's because what I was told by the team who developed it, the solution already possible to deploy and to launch by banks or other fintechs. The technology is already accredited by Visa and MasterCard, and
Mm.
now it's possible to get it launched, um, get integrated and connected with your local bank, local acquirer, processing center, and uh, again, zero cost to start accepting money. Uh, Companies and local banks could charge nothing, and scalability and delivery time for the technology to start accepting payments, nothing. It's zero. It's immediate.
No, that's amazing. And I'd love to know more about that technology. What people are trying to use here in Latin America is using the devices to receive payments, but once you have the payment, when you have the cards virtualized in your wallet. So there's an interesting fintech here in Latin America, in Ecuador, named Payphone. They have offices in Kenya, and I think in Malaysia, I think. And what they do is something very similar. What you do is, or what that services does, but you don't need the card, because the card you just virtualize it in your system, and then do you put the payments. But it's interesting. There's a lot of people that would not use only cell phone to use it as a wallet, but I don't think senior people will use cell phones as wallets. They're gonna use the card and they need to pay with card. And look the example of Ecuador, and maybe it's the example of the same problem it has Panama and some other 27 countries that has, maybe you don't know, but we in Ecuador, our coin or the legal coin here in Ecuador is the American dollar. The Central America, the Ecuadorian Central Bank hasn't the chance to issue money because we use the American dollar. We lost our currency in 1999 due to a financial crisis. That's another conversation. But what happens is that if the government would like to issue new electronic currency based on maybe bitcoins, they will need that people use massively the kind of solutions that you have in your hand. Because if you issue money and there's no circuit for the money to circulate, there's no way this money could work anyway. And maybe in the past that's been the reason for some cases, in several cases, for what happened in the past in terms of the total failures of programs of government to implement electronic money. How you could implement electronic money if there is no electronic circuit for your money?
Yeah. That's true.
So we have besides besides the biosecurity problem we're facing now with using cash. It's stupid here when you buy eggs and milk, they give you the change and they put some alcohol in it. It's stupid, but we have to do that. We have this crime problem in terms of people trying to steal you. So we don't like cash in Latin America because it's dangerous in biosecurity terms and crime terms. But we also have this, especially in Ecuador, this motivation, macroeconomic motivation to move forward in a total contactless payment. But that means that the whole system, the whole economic system would have to use massively this kind of apparatus.
I see. Raul, you mentioned a couple of crucial topics around the Latin America fintech and startup landscape and environment. Could you please elaborate? You mentioned there are some space for startups who want to make a deeper penetration for opening bank accounts for individuals, probably businesses, for this payment acceptance space as well. But what are other and different fintech opportunities in Latin America and in Ecuador, especially for foreign fintechs?
For what fintechs?
For foreign fintechs.
Look, there's a lot of people developing interesting here in Latin America, but the problem for them, the problem for all the innovators in Latin America is that they are not totally connected to the world in terms of researching what's going on. And maybe people outside of Latin America have been developing or have developed some sort of solution, and it's already developed and it's already proven. And what the advantage that some fintech in Europe would have, some Latin American fintech, is that they have been already under the scrutiny of the regulator. And in Latin America, except in the case of Mexico and maybe in Colombia, most of countries do not recognize other institutions that banks and cooperatives as financial operators. So what you have is the experience to deal with regulators and to deal with risk management and to deal with all these kind of certifications. So in Latin America, we have geniuses working on brilliant technologies and very cost-effective technologies, but they do not have the experience to make these products reach a global audience or reach a global market. and they don't have the experience dealing with the regulator or dealing with the agency or dealing with the banks or how to deal with the banks. So that's one of the problems we face here is, and maybe you have solved that. Maybe you have already seen that. That's the main advantage for fintech companies, and especially from Europe, especially from the UK. They know how to deal with the regulator already, and actually they can teach our regulators how to regulate them. That's paradoxical, but that's one of the things that could happen. So that's what I think. That's why I think there's a huge chance for some foreign fintech companies, especially in the payments industry, to move forward to Latin America, considering this is a huge market that's underserved. That's the amazing thing about Latin America. We have a much more developed continent than Africa, but maybe much less people served by the banks, and that's for me a huge opportunity. Yeah, and I also consider there is chance for Latin American fintech companies to move to Europe or to move to Asia, as long as they have developed solutions with too few resources. One of the problems we face here in Latin America is that we do not have, the government putting money on research or the universities putting money on research. So people have developed a lot of technologies with their resources, or scarce resources. So they have um, very interesting, cost-effective technologies that we could discuss any day later. But they need experience, and they need the experience to cope with the regulator, and they need the experience to reach a global audience. So what I would think is that what we're seeing here is an opportunity to match some fintechs in Europe with some fintechs in Latin America, to make teams in order to reach the global markets. And one of the problems we all in the developing economies we face is that every time that someone says, okay, I have this technology, it was made here in Ecuador, everyone says like, maybe it's not that good. But if you said, okay, I have this technology, it was developed in the UK, and maybe it's the same technology, they say, oh, that should be great. So that's something that I think it is very common sense, a very common feeling in most of the developed world. So if some companies here in Latin America could move in virtual terms to the UK, and from there conquer the world, it would be great. So
I see.
I think we have this double way opportunity.
I see. Let's imagine that some of fintech companies and probably foreign banks would like to reach the Ecuadorian market and the Latin America market. How do you see the whole industry of new banks, of challenger banks, and banking services will look in 10 years? What is your perspective? What is your forecast?
Look, it's interesting because one of the most, or maybe the most successful neobank is neobank in Brazil. And it's interesting because it's a Colombian engineer that moved to Brazil and funded neobank in Brazil because he saw a huge opportunity there. Right now, the regulatory framework in Latin America, except in Brazil and Mexico, will not give you access to for you to make a 100% fully stacked digital bank. In some cases, the regulatory agency will request from you some physical presence. Okay, I think that's going to change in maybe 2 years, 3 years. And why is that's going to change? If you see, what we're facing in the world is that banks should be digital banks. There's no reason to have banks in the way we have it now. As long you can do Everything what you do with a bank, you can do digitally, and even in a mobile phone. There's no need for physical branches. There is no need for all the infrastructure they have. So in the real terms, a digital bank as an efficient model of what all the banks should move to. But moving from a physical bank to a digital bank is very hard. You need a new way of doing things. You need a new structure. You need a new infrastructure. You need a new organization. And so that's very complex, to transforming your traditional bank and moving to a digital bank. So most of banks, and you will see, and we can bet on this, you will see a lot of banks creating digital banks as a spin-offs of their banks, because it would be much more easier for them creating a branch, a digital branch, a digital bank, and start moving their clients to there. That's difficult. That's very difficult. I have a whole presentation about this. This is what I'm focused right now. But you will see a lot of digital banks emerging from that. But now, you will see two kind of digital banks arising from now. One would be the banks coming from traditional banks. Another 100% native digital banks like Nubank. But 100% native digital banks should consider that credit, but is what banks solve, and one of the engines of the growth. Credit is made on the basis of cash. So if they do not develop ways to capturing cash instead of physical branches, you would say this kind of technologies you have in your hand. If they do not put attention on that, they will not be able to succeed, because they will not have them enough money to put credit. So the foundation for digital banks is digital payments.
True, and 100% correct. Yeah. Raul, I totally share your ideas. It's because, listen, you 100% agree. When you are developing a bank and you're not you're not embedding the latest digital payments technologies, how you will circulate the money into your financial entity. That's 100% right. The last question I have, do you have QR payments like WeChat and Alipay, all of these Chinese payments in the country or not?
Yes, some of the big banks are moving to that. Again, the problem is how you want to do. I mean, it doesn't mean if you're a bank, if you're the central bank or you're the government, how you want to implement electronic payment systems if the 70% of your population doesn't have a banking account. How you do that? That's stupid. You cannot do that. And I'm very serious of laughing at this force, because it's stupid. The first thing you have to do is find a way to give a banking account to the 90% of your population and make sure they're going to use it. Yeah. So yes, we have QR. We have a lot of people trying to do this in Latin America. And there's 100 people doing the same thing. But the problem is again the same. So the fintech that could solve this, providing in a secure manner, in a massive manner, credit allocation or credit or debit cards for the vast majority of population, that fintech would be at the core of the payment systems, and the payment systems would be at the core of the financial system. Okay?
I see.
So,
I see. Good to know.
look, actually, what I do, I help fintech companies. Well, actually, I help any kind of information and communication technology to deploy their services here in Latin America, and that's what we do with my partner. We help companies to establish here, digital companies, not any company, digital companies to establish operations in Latin America, understanding the regulatory framework, understanding the cultural framework, which is interesting, and understanding the macroeconomic from a different perspective. We are not traditional economists. We understand the economy from a different perspective. And that's why we have been so successful in helping other companies establishing here in Latin America and helping understand. And what we are doing now is trying to make this bridge double way. I mean, helping companies landing here and helping Ecuadorian and Latin American countries landing in UK or any other country. We're looking for partners to do that. But what I told you is that sometimes Latin European technology firms and um, American firms, they do not see the whole spectrum of what they're gonna do in our territory, and that's why so many of them fail. They need to understand that in order to establish their companies here, they need to do some adjustments and maybe take a look at the political environment. Look, an example, what happened to WhatsApp payments in Brazil. It was a stupid move. If I was WhatsApp, I would start making WhatsApp payments here in Ecuador and maybe in Peru and Colombia or in the three countries, not in Brazil, because Brazil is a country that's not open to foreign innovation.
I see.
And that's cultural. This is political. They do not like foreign companies. They say Brazil for the
They are too
Brazilians.
big, probably. They are so
Yes,
proud of their own country.
yes, yes. And I know, I understand some people say, oh, okay, you are putting in Brazil to risking losing the WhatsApp service, and they say, okay, it's okay, we can put something in between in days. It's okay. So uh, if I was WhatsApp manager, I would started WhatsApp payments here in Ecuador because we have uh, the legal holes in the legal system in order to do that.
I
So
see.
that's one
I
of the
totally understand what you're talking about. Yeah,
yeah, that's the
that's
thing.
good to know. That's good to know.
And again, and
Uh,
again, and again, as I said in the principle of the beginning of this conversation, it's not about technology. It's about people adopting technology, and that's the thing.
True, 100% right. Raul, thank you very much for your time and for your expertise, for your experience. We'll be happy to talk to you next time. Thank you, and have a
Um,
lovely day and have a lovely week.
Thank you, and I'm here for you anytime you need. Let's talk.
Will do. Thank you. Cheers.
Okay. Cheers.
Bye bye.